I think we are in a non-essential bubble. Everything seems important, so of course nothing is. Greg McOwen. Well, Greg is right. If you try to make everything important, nothing is important. What we do is focus on the essentials. We use primarily the price percent oscillator. We use three charts, the weekly, the 2-day, and the 4-hour. And we look at vertical crossovers. Actually, we look for vertical crossovers, then we follow those. Why? Because vertical crossovers on our price percent oscillator show us changes in trends, strong enough movement in a newly established trend to rotate the price percent oscillator, which is a percentage indicator of the MACD, the moving average convergence divergence indicator. These are simple mathematical formulas, but what they show is significant change in price movement, trending changes. That's what we look for. That's what we follow. We keep it as simple as possible. We don't focus on everything because, as Greg says, then you see that nothing is important. We focus on what is important. We are trend followers. And if you can do that, my friends, you're not looking for hiccups in the market inefficiencies as some day traders do. And with quant trading, computers, artificial intelligence, those days at some point will be gone. The computers will be doing all of that. But what we do is follow trends. And of course, we have been accurately over the last many days following a number of very good trends, both downtrends in gold and 20-year bonds, and uptrends in both the NASDAQ 100 and the S&P 500. We see everything moving just as our weekly vertical crossovers said they would as we end this week. Now, we have a special training for you. It is on how to fill out your trade worksheet, which we hope you are filling out every time you do a practice trade. We hope you are doing all the practice trades that make themselves available. If you're not doing that, you're really wasting a lot of your time. Maybe you're not wasting, you're just not getting all you could get from it. And we want you to get everything you can get. In your show notes every day, you will see that we have supplied for you for free PDFs, printable files that you can print out, trade worksheets, daily market worksheets, and weekly market worksheets, and we teach you how to use them. That's what the attached training is all about. We have filled out a trade worksheet and we show you how we did it, why we did it, what we did, and how to use it. So please take that training. If you're not signed up for chartingwealth.com's daily reviews and once a week weekly review, you need to do so. Otherwise, you're not going to get this training. You can find that at chartingwealth.com. Go there, sign up. We don't spam that list. It only stays with us, and we will send you once a day. Every day the market is open, the daily review, and then once a week, we do this on Fridays at the close of the market around 4 p.m. Eastern Time in the U.S., we record our weekly review. So that's what we're doing right now. If you haven't purchased our book, we've been selling a lot of those lately. 13th printing is available. Autograph copies waiting for you. Follow the link in the show notes. More about that later. Let's jump into these charts. As I said, the S&P 500 up on Friday, 0.24%. Look how beautiful we ended the week with an up candle, price percent oscillator heading up, derivative oscillator gaining upward momentum, stair steps up, going into the fourth week of up movement, first full week after the weekly vertical crossover that occurred on the 1st of November. Now you might say, well, wait a minute, why didn't we get in all the way back on this first candle? The reason, and that would have been on the 18th of October. Why? Because we did not have an established trend. We did not have a weekly vertical crossover. We didn't have it at the close of the second week, but we did have it at the close of the third week, which was the 1st of November, and we have had wonderful appreciation. Somewhere around the 304 mark was the jumping in point on Friday afternoon, last Friday, up to a high of 309.65. I don't know, is $8 per share roughly in a week? Is that decent for a practice trade? I would say Yes, it would be. And there are plenty of you that jumped in on Friday, jumped out on Monday with a significant gain, and that is fine. Again, we want you to practice trade whatever way seems fit for you. One thing we always ask you to do, though, is when you enter that practice trade, always enter a good till canceled sell order at the profit that you have decided to seek for that trade. How do you determine profits? Based on any number of things, based on your past experience in the ETF or stock that you are trading, based on maybe an average of percentage gains you've seen with crossovers in the recent past or perhaps in prior years during that same time period. There are a number of ways to do that. We talk about those things in all of our different trainings here at the show when we have them to discuss. So again, be with us every day, take the trainings, go through the old trainings again if you haven't been through them for a while. We have dozens of trainings there at the website and at the YouTube channel. Sit down, get out your notebook, listen, take notes, and again, practice with us every day, 10 to 15 minutes. So we see the S&P 500 heading up nicely. Nice, good week with that crossover. 2-day chart. Look at the beautiful, we 1, 2, 3, 4, 5 connected candles with that beautiful up movement. Derivative oscillators about flat, price percent oscillators heading up. Now, what we notice, we had the last full 2-day candle finish on Thursday. Friday is just a half 2-day candle, just represents, of course, 1 day. We do see a little bit of weakening. We haven't reached a higher high. The body of the candle is higher, which is good. We're well above the 2-day, well above the weekly trend line. So just note that. Pay attention to that. We didn't reach a higher high yet. Remember, we look back at the 4-hour chart, we can see we reached the big high back on Thursday. And then things have been going sideways, peaked up a little bit in the afternoon. Again, gave us a close, 0.24% higher for the day. That is nice. Derivative oscillators losing momentum, has crossed over going down, did so with that morning drop on Friday and continued to accelerate. Remember, it's an oscillator, it's oscillating. And the price percent oscillator also is basically laminated, might have ended up the day a little bit below. Remember, we're paying attention primarily, though, once we use the 4-hour chart at times to jump into trades. There may have been some of you that looked for it to bounce off and were looking at a jumping in point yesterday afternoon if you had not jumped in, of course, at the prime time, which was that weekly vertical crossover back last Friday. What we end up looking for is we can use that 4-hour chart for triggers, but after we do that, we always go back to our 2-day and to our weekly to see just how strong that trend is continuing. Now, or weakening. Now we're going to the Qs, up 0.40%. Is this not beautiful, friends? We had a jumping in point 2 Fridays ago, the 25th of October, somewhere at 193, almost 94. And how high did it go? 102.72. So over 2 weeks from 194 to 172. That's pretty darn good, is it not? Pretty darn good. So again, we will continue to watch this trade as it moves along. Ended up the day, as we said, 0.40, price percent oscillator heading up, derivative oscillator heading up, higher high, nice big green candle. Go to the 2-day chart, first day of the latest 2-day. See some weakening again, not reaching a higher high than it did that prior full 2-day candle ending Thursday. Go to the 4-hour chart, and of course it has gone negative. We can see that the price percent oscillator is below the red signal line. Down movement in the morning, recovery in the afternoon. But again, pay attention to that, but don't get overly panicked. But just realize we're starting the week off with that 4-hour chart in a negative as far as derivative oscillator and price percent oscillator goes. It can oscillate back over going up. Could just be digesting some things. But again, we'll watch, see what there is to see how this next week starts out. But it ended the week strong. Oh, and don't forget, Markets are closed Monday. We'll be open Tuesday. So let's keep moving through. We see the TLT 20-year bonds down again, 0.42%. Price percent oscillator spiking over, going down a little more. Derivative oscillator looks like it's about flat, maybe gained a little bit of momentum. But again, things ending the week nice and strong for continued down movement in an inverse trade in something like TBT, which is the inverse fund for TLT, inverse fund for TLT. TBT, of course, is, and in fact, I'll show it to you for those not familiar with what I'm talking about. It is the ultra short, oh, wait, not TBT, forgive me. TBF, we don't want to go with the ultra short. We want to go with a single short. Of course, it's been moving up. And we can see how it has continued to move up. Again, the price is different. It's considerably less pricey. What the people who run the fund attempt to do and do very well is they match day to day the percentage change. So if TLT as it did today goes down 0.42%, TBF goes up 0.42%. It's an inverse fund. Little bit of sophistication there for us. So we see that 2-day chart, again, moving down, derivative oscillator gaining downward momentum. Still hasn't reached the lower low that it did on that prior one. So we'll just pay attention to that. Just note that on your trade worksheet. And we can see things bottoming out about the same point, 135 something, low 135s. Again, derivative oscillator has been losing some energy since it peaked in down movement back on Thursday afternoon. Up in the morning a little bit, down in the afternoon. Well, a deceleration in the morning, down in the afternoon. Price percent oscillator still moving down nicely. So again, we'll continue to watch, see what there is to see. For those of you who jumped in late, didn't jump in at that weekly vertical crossover way back, and there were good reasons to take your profit and get back out. But to look to get back in, that jumping in point was, of course, on the afternoon on Tuesday after the weekly vertical crossover Tuesday morning on the 5th. And, of course, the jumping in point somewhere around 138. And we reached a low, actually reached the low back on Thursday, it looks like, of 134.45, the low on the day on Friday, 134.78. So again, looking nice. Things are going well for, in fact, everything, because next we're going to gold. Gold was down for the day. Now, gold had its weekly vertical crossover all the way back on Friday, the week ending Friday the 27th of September. Down and sideways really since then. This is the, we sort of had a nice down week that first following week after the weekly vertical crossover, then sort of weakening and up a little bit. And then, of course, this latest week, nice down moves. Price percent oscillator shows that by kinking over, going down. Derivative oscillator gaining downward momentum. We go to the 2-day chart, first day of the latest 2-day. Nice, big, strong down candle. Actually reaching lower lows in gold, which is good to see. Very, very good to see, pushing back through that weekly trend line that it had moved above. And we go to the 4-hour chart, and of course we can see how things have moved down nice over the course of this past week for gold. Of course, we had back on Tuesday morning that vertical crossover on the 4-hour chart, jumping in point Tuesday afternoon, somewhere around the 141 something mark. And of course, a low all the way down 137.39. So again, nice progression, things moving exactly on all 4 charts as our weekly vertical crossovers have told you they would. Do things always work perfectly? No, they don't. The market is a dynamic place, a lot of competing interests. That's why we have a rules on loss limits that we follow particularly well. Losses will kill you. Gains will never kill you. We want you to follow us every day. 10 to 15 minutes is all we ask. You haven't purchased our book, please do so. It's a great way for you to support the channel. Appreciate the Patreon supporters, Patreon members. Next Wednesday, the 13th of November at 12:30 Eastern Standard Time, we will have our monthly question and answer session. Go ahead and start emailing your questions to us, cw@chartingwealth.com. If you're not a Patreon supporter, all 3 levels have access to our monthly Q&A, where again, more in-depth training, practice trading, all that is available. Folks, we appreciate you being with us. You're the reason we are here. We love to hear from you. cw@chartingwealth.com. Buy our book. If you're overseas, you can't buy our book through Square. I am sorry, but if you'll email me, cw@chartingwealth.com, I will email you back a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. God bless. All the best from the whole team at Charting Wealth World Headquarters.